Here, clearly, we see an uptrend. High and the low and the higher high and the higher low. So here at this point, market created a rally. This is called rally move. So this is a very strong demand area, because in supply and demand, when the price increases, that means that there's a huge demand over this price. And mostly, the pressure that happened at this point, the very, very high pressure that happened at this point, caused the market to create imbalance. Imbalance is a great difference between sellers and buyers, because markets are always moving to the direction of the stronger bias. So here, clearly, we see that the price moved up. By meaning this, there was huge orders that caused price to move to the upside. What does that mean? For example, let's say we have amount of 1,000 orders existing here. Perfect, okay? Here we have 1,000 orders. Now, when market executed these orders, of course, not every order was executed here, because the momentum that happened at this price level caused a part of these orders to be executed. Let's say 500 orders here were executed at this order. 500 orders. So how many orders left? How many orders left? We're talking about 500 orders left here. 500 orders left here. Market will chase these orders to get back to the upside. A lot of orders existing at these price levels, and markets will chase these orders again. So many buyers exist here. So many buyers exist here at these areas, and so many sellers exist here at these areas, because when the market gets back to the downside like this here, and candle managed to close to the downside like that, so many sellers believe that this is a breakout for the market to get down, because it finally broke out the support. And at the same time, there are so many buyers that believe this demand zone will hold to break to the upside like that. So this creates a liquidity pool. This creates liquidity pool for institutions to move the price further. This is where the inducement happens. I'm explaining very advanced supply and demand concepts. So the lower we buy, the better our position is, and the higher we buy, the better our position is. Taking this example on AUD and ZD 15 minutes time frame, what we see here? What do we see here? We see here a very clear uptrend. A very clear uptrend. If you don't know what an uptrend is, this is going to be very hard. You have to study basics. But we see here a very, very clear uptrend with a break of structure to the upside. All right. So here what we notice, like that, market, it found different area of demand, like that. See this? See this? See this how it happened? As I mentioned, guys, the same way I said about this inducement, it happened here at this price level. This is very premium education, very, very, very premium education. And knowing this will change a lot of things in the market. A lot of things, I promise. So when we see this as inducement, and we manage to buy at this area, this is where things can change. So when we notice inducement, our position gets way better in the markets. Way better. See this beautiful risk to reward. See this beautiful risk to reward. And that happened just because we managed to understand how we can avoid inducement, how we can avoid being a part of liquidity, but being with the right direction of the market. Because if you don't know how to spot liquidity, you automatically will be the liquidity itself. That's why chasing the market is the last thing we as professional traders we have to do. And this is why we managed to win FTMO challenge multiple times. So remember guys, inducement is a very, very essential part in the markets, and getting the right education in the markets is always the key for profitability.